assets. So let's bring on board Anuj Khanna Sohum, the CMD and CEO at Affle India, joining in the show right now. Anuj, hi, good morning. Good to have you on the show. Before I talk about the operational performance for the third quarter, just wanted to understand this new acquisition of Discover Tech assets. Walk us through the rationale and what does it really bring on the table for you?
Well, hi, thanks for having me on your show. Well, as you know, Affle is a global consumer platform business, and essentially what we are able to do for our advertisers and marketers are delivering them touch points across the entire consumer journey on the mobile device, right from when a user buys a new phone from a OEM or a handset manufacturer all the way, till they use hundreds of apps through the journey of having that phone every single day. People are using their phones over 100 times. On a typical average user's day. And what we do is essentially create touch points on the consumer journey to discover new user conversions or get repeat user conversions for the advertisers. And we're also able to map onto possibilities for offline advertisers to increasingly embrace digital, connect with the consumers on the mobile phone and drive footfalls offline into their physical stores or physical business places and drive offline conversions. This new acquisition, which is basically an Israeli company called Discover Tech, we have acquired their business assets and we have acquired their product and the full intellectual property. And what we have done is we have launched our AppNext platform's global out-of-the-box onboarding experience product, which works with handset manufacturers and telecom operators to help them customize the consumer's journey right from day one when the user buys a new product or a new device, and how we can create deeper engagements with them. We've also vernacularized this where the user can customize their experience on the device in the local language apps with local affinity and so on. So it's really quite a strategic move for us. It's a small product acquisition, but the business opportunity is global. There are some companies listed in the United States and their bulk of their business is actually just on this one product line. So I believe that with this acquisition and the launch of AppNext Ruby globally, we are going ahead of our competition on a global basis with a deep focus on emerging markets to deliver hyper-local, hyper-personal vernacular experiences on the devices.
Sure. Would you have done the math for what kind of return on investment are you expecting from this acquisition?
Well, we don't really provide that as an external guidance, but I would say that it's a global opportunity. The investment is very small. It's basically a few $1 million or so, which we have already disclosed in terms of acquiring the business assets, which is, the IP and the few contracts that this company has. It's largely a pre-revenue, business assets that we have acquired. And we are looking at integrating it deeply in our consumer platform journey and launching it across all emerging markets with handset manufacturers and also start deeper partnerships with the carriers. So these will be, massive returns that I expect, like we have already achieved for the previous track record of having done successful acquisitions over the last 3-4 years. I expect this one to be no different. We will deliver great outcomes for our stakeholders.
Sure. Anuj, on margin contraction, do you see that as a one-off or do you see it trending downward?
Well, I think in terms of margin, if you look at it serially, we have grown our margin profile from Q2 to Q3. I think our overall track record has been that, on a year-to-date basis, we have grown our profits by over 50%. We have grown our cash flows by over 100%. And even on a sequential basis, Q2 to Q3, I think we're doing quite well. On a long-term basis, I believe that Affle is going to deliver consistent, top-line growth because of our anchoring on the massive consumer trend of, digital adoption, connected devices adoption, and also the advertisers are, increasingly spending their advertising budgets on digital. So this trend is here to stay. It's a multi-year tech and digital transformation trend, both for the consumers as well as for the businesses and the advertisers. So Affle should continue to maintain its revenue growth trend while delivering sensible bottom line, cash flow positive, profitable, capital efficient performance for our shareholders.
Okay, and consumer engagement on mobile platforms. Can you describe for us in ways to drive increased activity there? Any benchmarks you've set in place on that front? The new tech that perhaps you're developing or acquiring towards this?
Sure. If you look at the India market, there are about 600 million connected device users in India as of last year. And what we are seeing is out of those, there are about 20% odd who are deeply adopting and engaging and are actually transacting on their mobile phones and connected devices to actually buy, or engage with services of the businesses which are advertising on connected devices and digital. What we expect over the next few years is that India alone will have over 1 billion connected devices, and the number of people who will be online shoppers or people who actually do conversions with businesses, that number will be over 400 million in the next few years. So we clearly see that as a massive growth just looking at the India market. As you know, Affle is a global company. 50% of our business comes from India. Another 50% comes from international markets, which is also deeply anchored on other emerging markets. Like in Southeast Asia, we are in Indonesia, Vietnam, Thailand, Malaysia, and so on. In Middle East and Africa, Latin American markets, and we've also started building some on-ground presence in Russia. So what we are seeing is a massive, consumer adoption and engagement happening across emerging markets. And one of our key pillars of enabling this is, or key strategies is vernacular experiences. So one of the V's out of the 2 V's is vernacular, and we are going deeply vernacular, hyper-local, hyper-personal with the consumers on their engagements. And on the advertiser side, we are anchoring it on what we define as verticalization, the second V of our Affle 2.0 strategy. So vernacular for consumers, verticalizations for the advertisers. And these 2 trends are going to, deeply enable, engagements with consumers, conversions with consumers on mobile devices, delivering ROI for businesses, and also making sure that the consumers are, reached out to not only for consumption-based businesses, whether it's e-commerce or entertainment, but also for lifestyle businesses like education tech, financial services, health tech. And I feel quite satisfied with the way the consumer adoption is happening across verticals, for essential services as well as consumption-oriented services.
Sure. Anuj, lastly, help me understand how Q3 panned out, and especially, the trends that you witnessed in both the CPCU and the non-CPCU business segments, and how growth is panning out there, and how is it that they both compare?
Q3 was a record-breaking quarter. If you look at the way we have set ourselves up for this financial year, we are looking at hitting at least 3 century milestones in terms of our performance. Right, over 100 crores of hopefully profit after tax, over 100 million conversions that we would drive, and in terms of cash flow also ensuring over 100 crores plus of conversions that cash flow from operations that we would generate. So we have set ourselves very nicely, and Q3 has been a record-breaking quarter for us. And so this financial year is all set to, it's Q3 has set us up really well to complete those 3 century milestones of 100 crores PAT, 100 crores cash flows, 100 million conversions. And all this growth has happened in a very broad basis. We're seeing growth across our top 10 industry verticals, which contributed over 90% of our revenues. We are seeing growth in existing markets. We are seeing growth from new customers in existing markets. And we've also started building inroads and investments into opening new markets for us. We've hired a very small team in Japan, in Korea, in China, and in Russia, as I mentioned earlier. So we are definitely increasing our footprint, and we have laid a very, very solid long-term growth foundation in the calendar year 2020, of which Q3 was our best performance on all parameters on a very, very broad basis.
Sure. Anuj, great to have you on this show today and, speak with us so candidly about how things are shaping up and, of course, about the newest acquisition as well.
Thank you for having me.
Okay, on that note, we're going to take a very quick break with news from the markets that were still holding on to the gains as of now, and similar is the state across the broader end of the market as well, with advances taking over. For now, ONGC powering ahead 7% higher, Tata Motors up over 5%, and DLF scaling up 4% as we speak. We'll take a very quick break. When we come back, Chartbusters with our technical experts.